Hi, fifth graders, it's Miss Cobble. This week we are working on finance literacy. So finance literacy, it's referring to the banks, money. It's basically how we budget, pay taxes, and a lot of what you will do in everyday life as you get older and have a job. First thing we're going to look at is the types of income. So the main two types of income are gross income versus net income. So gross income is everything you earned. Right here it says throughout the year, but even like within a month. So if I'm working at a restaurant and I make $10 an hour and I work 2 hours, $20 is my gross income. That's what I make. So net income, that's the amount that's left after taxes. So really, if I work at a restaurant and I make $10 an hour and work 2 hours, unfortunately, I don't get to take home $20. Taxes are going to come out of that, and your paycheck will be a little lower. So why would net income decrease or go down? Most likely, your payroll taxes have been increased. So if your net income is going down, you're probably paying more payroll taxes. So now let's talk about the different kinds of taxes. So overall, taxes are money or is money paid by citizens to support the government. The taxes, we pay taxes because that helps build roads. It helps to build our schools and libraries. A lot of those public places, they're built with our tax money. That's how they're able to do that. So different type of taxes that you may hear about. First one is property tax. So this tax is paid to the government based on the value of land or home. So like if someone owns a home, they will pay a property tax and they will have to pay that monthly in order to have that house. Now the next one is sales tax. You're probably a little more familiar with it. If you go to a store and you see that a piece of candy is 79 cents, when you get up to the cash register, it's not going to be just 79 cents. It's going to be slightly more because of the sales tax. So the next one we're going to look at is payroll tax. So this is based off of your earnings. So when someone is working, they, are making an hourly rate or a salary, a certain amount of money, and they have to pay the government taxes. This payroll tax may be stuff like Social Security, which helps when a person retires. So payroll tax is basically the money that comes out of your pay when you're working a job. So income tax may sometimes apply to you. It's paid by employees based off earnings as well. You're not going to deal with that so much this week, but you probably will hear it mentioned every once in a while. All right, so payroll tax example. So just to kind of make it a little more real life, if I make $10 an hour at a restaurant and I work 10 hours this week, my paycheck, let's just pretend, my paycheck is only going to be $87. So that's a made up number, but that gives you an idea. I'm not really making $100. I have to pay taxes. And so what I actually get in the form of my check is less than what I'm making per hour. You can see how I calculated it. Gross income, so $10 an hour times 10 hours is $100. So my gross income was $100. My net income is $87. This is really how much I end up with to be able to pay bills and have on hand. Then the last thing, if I was trying to figure out, I made $100, I ended up taking home $87. If I'm trying to find how much with the dollar amount of taxes I paid, I would subtract. So in this case, I'm paying $13 worth of taxes. Okay, let's talk budgets for a minute. So when you have a budget, so a budget is basically coming up with a plan. Okay, this is how much I make. This is how much I'm spending. It's a way to keep track of your money. If a budget is balanced, It's the expenses are equivalent to what you're bringing in, the income. And I'll go into a little more detail on this in a minute. So basically what I'm spending is the same as my income. If there's a budget deficit, then you're spending more than you make. So if I bring home $87 from a restaurant and I have a $100 cell phone bill, I have a deficit because I didn't bring home enough money to pay for it. Then lastly, a budget surplus is if expenses are less than your income. So in this case, that's a good thing. That means you're saving money. So if I make $87, but my bill is only $50 and that's all I have to pay, then I have money left. That's a surplus. Here's an example of a balanced budget. So in this case, I made $15 babysitting and $50 mowing lawns. So my total income is $65 when I add those together. My expenses here, if I buy a pair of shoes for $12, I buy several lunches for $20, and then I have a cell phone bill for $33. When I combine all those numbers, I end up with $65. I made as much as I spent. So in this case, it's a balanced budget. I could have had a surplus if I would not have bought the shoes, because then I wouldn't be spending the $12. Now, let's say I went and bought extra clothes. Well, in that case, I would have a deficit because I'd be spending more than I made. All right, last piece, advantages and disadvantages of different methods of payment. So there's several ways that as you get older, and you probably see your families do that, there's different ways to pay. The first way we're going to talk about is a check. We don't use these quite as much anymore, but a check is a way to write out a payment and it comes out of a checking account. It keeps a record and it's a pretty safe and easy way to make a payment. A credit card, most of us are familiar with this. They're fast, easy, you just swipe it and it goes to your bill. One of the major disadvantages of a credit card is that it charges interest, which means that you still have to pay your bill, whatever you charge to the credit card, but you're probably going to have to pay additional money on top of that as well. The next one is a debit card. So a debit card, it's pretty fast and easy. You kind of swipe it like a credit card, but it comes directly out of your checking account. So it's actually coming out of the money that you have right there. Disadvantages are you need to keep track because you don't want to spend more than you have. Otherwise, fees could be involved. And then the last part is electronic payment. So these are payments that you do on the computer. So a lot of people in your families may do this, may pay like a water bill or electricity bill on the computer. It's fast, it's easy. We do that a lot more often nowadays. Disadvantages is we have to make sure we're using secure sites. And then also, of course, we'd have to have internet access as well. Last part is cash. We use cash, but we probably don't use it as much as people used to. But what do you think the advantages and disadvantages of using cash are? When I think of cash, disadvantages of having cash is you have to go to an ATM or somewhere to get the cash. That's what makes credit cards and debit cards so convenient. Now, the advantage, though, is you tend to not spend more than you have. If you are paying with cash, you can only pay with the cash you have. I hope this helps. Let us know if you have any questions, and I hope you have a good week. Bye.